Good afternoon. So I'm going to make best use of the opportunity with very little time. Uh, I will talk about two very interesting things which will be a little out of the way. And then I will let you with this thought so that you keep reflecting on that. Uh, as we all know, uh, financial inclusion, especially in the context of G20 deliberation and what the G20 has accepted and kind of documented it, it has got basically three dimensions. The G20 deliberation in the year 2013 zeroed in on three dimensions of financial literacy. And they are like this, as many of us may be knowing, access to financial services. What we mean by building greater financial inclusion is providing access to a greater number of people. And the other one is making sure that the usage is also equally good or equally deeper and wider. And the third one is the quality of the products and the services in the context of inclusive finance. The third one is in some sense going to mean that you should not have products and processes which are very difficult, very obtrusive or not user friendly. And in that context, obviously we all will agree that technology is a great enabler for greater and deeper use of services and products, as we many of us have experienced. Even the rural population is experiencing it. In the context of demonetization, we all know how even very illiterate people, very poor people, they are also kind of driven to a situation, but because technology is available, they are able to use to continue to deal with customers. Like in Pune, immediately after the demonetization, when I had gone to buy fish, I didn't have much cash, and then I asked whether it is possible to buy. He said, "I have the cards and all. I mean, what do you call the card readers and other machines and all." So he took my card, and immediately I could buy quite a big amount of thing. Anyway, so these are the three dimensions which we all know, and almost all countries are working on this. As far as I'm concerned, and as far as the CAB is concerned, I'm going to put before you a fourth dimension, which I'll put it in an interesting way. And you'll be happy to know that this is a dimension which people do not talk about. And I believe so far people have not talked about. What is that dimension? Before I put it before you, I would put a framework before you in terms of thought process so that you'll better appreciate that. All these three things which people describe in the context of dimensions, they are basically micro dimensions. Micro dimension in the sense that what we are looking at is a granular thing. That is how at the last point the customer is coming into the bank is reaching out to the customer, what is the application technology and other things that are being used for the people to come in and deal with the financial system, get into the financial system and use the financial processes and products. This is at a granular level or a micro level. Most of the countries, they have not so intensely been talking about the macro part of it. What I mean by macro part is that the aggregate context in the matter of the policy, in the matter of regulation, and in the matter of institutions, the way they should be designed, in order that they actually facilitate financial inclusion. They actually facilitate financial literacy. This thing has never so animatedly engaged the attention of the policymakers, even the practitioners and academicians while talking about that. I'm going to amplify about it by giving an example or two. The immediate example that I will give you is the regulatory innovation which RBI did, or in India we did, by, in our own way, in our own context, making sure that the financial inclusion takes place in a much better way and much more efficient way and much more inclusive way by introducing new types of institutions. To give you an example of that is the payments bank and the differentiated bank, or say small finance bank. Earlier in India, there used to be the only one type of banking license that RBI was giving, and that license was for universal banking. So there never used to be a focus, there never used to be a dedicated understanding that I'm going to give license to this institution, and this institution is going to deal with small people or is going to reach out to the farthest corner of the country. The loan ticket size should be 10 lakh or something of that type. Because as you remember, if you have read, the G20 agreed financial inclusion indicators include 1 out of 15 or 16 or maybe 19 is the ability of the enterprises to access the market, access the financial system on the asset side, like availing the loans and other things, which when we practically talk about would mean MSMEs. So if the MSMEs or say micro borrowers or the microfinance or micro loan, the people who need very small ticket size loans, they are going to go where? Microfinance institutions. But through a regulatory innovation, institutional innovation, we have put in place an institution like Small Finance Bank, where they would be exclusively dealing with small ticket loans. Similarly, we thought of an institution which will be only doing the payment transaction. So this is called the macro perspective of financial inclusion in one sense, not an entire sense. Now, having given that example, I will turn to the second example, and I will wrap up my presentation, or whatever you call it. The other one is, we have taken it for granted that financial inclusion is something which is desirable, which is good, which must happen, and everybody who is in a position to do it, as officially it looks like, is going to do it, is supposed to be getting involved in that, which implicitly means that we all feel that everybody has got a mindset to get involved in this, to deliver it or do it. But if you for a moment think about different personality traits, which normally comes out in some certain psychometric tests, and one of the most famous psychometric test, the classic one, is called MBTI. How many of you know? I'm not sure. Okay. So MBTI puts people in different personality categories, right? And then it tells you what category you fall in and how you can improve or how you can be conscious of that. One of the very exciting or interesting things we have thought of in CAB Pune and on which we are working, and I thought I must share this with you, is the idea that if for a moment we think only about financial inclusion from the point of view of lending to people, that is enabling people to borrow from the banking system, we have always been thinking that everybody in the bank, whoever is posted as a loan officer or in the credit department, is going to have interest in lending to these types of people. And then we are presupposing that bankers generally have got an inclination in terms of the personality trait to do so. We ran a statistical test or kind of empirical test across 4 to 5 months on people who have been coming to CAB for taking training, and then we try to find out whether they have some particular personality trait under the MBTI. What came out was something which we suspected. What we found was the overwhelming number of bankers, at least from the data set that we created, they turned out to be completely rule-based, bound by rules kind of thing. Then We did another type of analysis or presupposition kind of analysis where we observed that when you want to do financial inclusion, when you want to do inclusive lending, that is, you reach out to borrowers who need very small ticket loans, they have typical deficits. They have got typical, from their side, paucities or inadequacies, infirmities, I can say, which a banker would normally point out as something which is actually standing as a hindrance for taking a credit decision. Like, to give you an example, in the context of the MSMEs, what usually the banks would tell us or tell the borrower customer himself, that you don't have credible information in the nature of, say, financial statement audited or even addresses or an income tax return. And those are the things which a banker is supposed to be mobilizing and putting them on record and then making analysis of that and preparing an appraisal note and then sanctioning it. And that's a process-bound thing. That is something which is prescribed by the bank in their rule book. And whenever they encounter a borrower of this category, what they normally encounter is a big set of hindrances, which in other words tell them that this is not a doable loan proposal. You cannot sanction it. I think it's very, very important to remember that in the context of financial inclusion, one personality trait which is absolutely important is one of those things which appear in the MBTI thing. It's called empathy. That is, the empathy quotient of a person must be high in order that he or she develops the inclination to do the inclusive finance or engaged in financial inclusion sort of thing. And we tried out with a set of bankers who have earned very good reputation and they've got very good records in, as for example, MSME lending. We ran the MBTI test. It's not exactly MBTI test, it's a modification of that which we have done in the College of Agricultural Banking of RBI, which we call as small lending aptitude. And then we call it, I will amplify that context taking 5 more minutes and I would finish it. We ran the test to discover that those people who have been eminently successful in doing this kind of lending, they are very high on empathy quotient. Absolutely high. It comes out loud and clear. So when you find that there is a correlation which needs to be further researched, we need to work further on that, it gives a very fascinating insight into one dimension of financial inclusion which has so far not been talked about. We have built on this idea and then we have argued, we are actually putting out a paper on this from the college side. We are arguing that perhaps unwittingly or by default, the banking system is recruiting such people through their recruitment process who are low on empathy quotient and high on rule-based aptitude. Or at least after the recruitment through training, this kind of personality trait probably is getting sharper. And then we turn to something that is happening the world over since decades. You would see that today many of the great achievers in management discipline, many CEOs, CFOs and all in multinational companies in India, in all big companies, those who are successful people, they have been recruited first as students by the management institutes. They have gone to Harvard, they've gone to Yale, they've gone to Stanford, IIM, etc., etc. What is the first thing that has happened when they got entry into the management college? They did take a test. And what is the name of the test? It's called GMAT. It is called General Management Aptitude Test. Now, the GMAT is nothing but the strategy of the management institutions to screen out and screen in people who do not have particular aptitudes which are not fit for management, that is screening out, and bringing in such people into the management study which fit into the requirement of management program. So at the very entry point, they're making sure that they don't get people who do not have the proper aptitude for management studies and perhaps do not have the aptitude to become good managers, potentially at least. Now, if this you study deeper, perhaps you will tend to agree with me. We all need to understand it a little more clearer way. So we thought of the possibility of designing a small lending aptitude test. And in that way, what we did was we mixed the MBTI and the GMAT approaches to recruitment or analysis of personalities, etc. And we have developed something called a small lending aptitude test, which we call SLAT, S-L-A-T. We make the bankers take the test. We are going to do that. We are going to host it on our website, and we'll make the bankers take the test. Where, people with certain aptitudes tend to score high, and with lesser aptitude will score less. We would have a kind of benchmark score based on some kind of empirical study further. If a particular person is scoring SLAT, then we would tentatively conclude that he has got that aptitude for inclusive lending or inclusive finance. If he is SLAT minus, then what we are going to tell him or tell his bank, you send this person for greater, longer duration training with us, greater motivational things we'll provide, greater sensitization programs we will run for him, or you might try out your management tools to bring up the empathy quotient of that person higher or something of that kind. If someone is SLAT plus, then what we are going to say is that this person is probably not only fit for inclusive finance, but is a leader in inclusive finance. So basically this program that we have designed, and under that program we are running this SLAT, is called Inclusive Finance Leadership Program. There the program is chalked out in a totally different way. So the short point that I wanted to make today was that there is a very important dimension to financial inclusion which needs further study, and we need to develop it in a much more robust way so that we probably deploy, engage particular types of people as far as possible who could be interested with this work and they would deliver better, instead of asking everybody to do it. Because going forward, what it looks like is that inclusive finance is not just a social commitment issue. It is a commercial and professional issue also. Because inclusive finance, as everybody today is agreeing, including economists and public policy people, there's a lot of wealth lying unlocked. It's not just out of charitable mindset we are doing it, or we are supposed to do that. There is actually a lot of money in this, a lot of wealth in this. It makes eminent commercial sense to do this. So we need to look at it from a much more professional point of view, much more specialization perspective, from a perspective of expertise and specialization. And the expertise and specialization can be built only when you pick up the right kind of people and motivate them, sensitize them, and train them, and educate them. And the last word that I would say before I close is that in the context of financial literacy or financial education, there is a very urgent need to develop an idea of financial expertise for financial literacy or financial inclusion, and that financial expertise can be inculcated in such people who have got the aptitude. Thank you all.